Bitcoin is currently sitting at $61,000, and over the past month it hit a low of $53,000. This could be a perfect time to accumulate Bitcoin. Now that could either be from dollar cost averaging into Bitcoin, or that could be using liquidity mining and yield farming. Today I'm going to be showing you how you can earn 30% or even 40% possibly APR on Bitcoin. And the reason why you might want to earn such a high APR on Bitcoin is so you can further diversify your exposure. Let's just say you have one Bitcoin right now and you're running a 40% APR strategy over the course of a year. The goal is that one Bitcoin would then turn into 1.4 Bitcoin over the course of a year. And this is because you hopefully increased your overall holdings. Which means if Bitcoin is at, let's just say $50,000 and you have one Bitcoin, then you'd have $50,000. But then let's just say Bitcoin goes to $100,000. Then you'd have 1.4 Bitcoin. You now went from 50K to 140,000 instead of just 50K to 100K. So you have an extra $40,000, an extra 40% right there. A lot of people fail to realize that cryptocurrency assets are inflationary as well. Currently, Bitcoin has a circulating supply of 19.7 million, and its total supply, its max supply, is 21 million. But if you take a look at something like Ethereum, scroll down, it has an infinite number of max supply. Although Ethereum does have some good deflationary measures in it. And then something like Solana also has an infinite max supply as well. So it's not just important to look at the US dollar inflation as well as other fiat currency inflation, but also cryptocurrency inflation, and look at different methods of combating that. Now, if you're like us at Builder Wealth, you probably look for blue chip strategies all the time. And when you look over on DeFi Llama, you see some pools with TVLs as low as $18,400 and showcasing an APY of 735%. But when we dive into this APY chart over here, you can see that there's just a small sliver period right here where there's a super high APY. Then look, here it says the APY is much lower. So obviously not too good. What I like to do is go back over here, look at coins with a minimum APY of at least 10, and then apply filter. Then I'd like to go over to TVL and look at coins with a minimum of 1 million. There we go, apply filter. Reason why is I don't want to be looking at strategies that have a super low TVL that might make me end up exit liquidity, where people can just dump their tokens on me and I'm stuck holding them basically. Remember, there's not much that we can do with native Bitcoin. We're gonna have to use a derivative of Bitcoin, something like Bitcoin.B, which represents Bitcoin bridged, or Bitcoin B over on the Binance network, which is Bitcoin facilitated by Binance, or of course wrapped Bitcoin. Now, I do notice a lot of opportunities when I type in these filters of the TVL and APY. You can see that there's 41 pools showing up. I'm gonna go ahead and up that TVL to something like 2.5 million. Here we go. Now we're tracking 22 pools. It's getting more narrow. So we still have some high performing opportunities, but we also have some lower ones that are like 15, 17%, 12%, and 10%. So what I can do here is look at pools that have Bitcoin along with a correlated asset or Bitcoin along with a stable coin. And the reason why I want to do that is because with Bitcoin and a stable coin, I can dollar cost average into Bitcoin on the way down. Whereas with Bitcoin and a correlated asset, essentially whenever Bitcoin goes up and Ethereum goes up, let's just say, because Ethereum is pretty correlated to Bitcoin, whenever those assets are rising, I'm making money and I have full market exposure. I'm not going to have much divergence loss because those assets are correlated and there's not much divergence between the two. So off the bat, I see Bitcoin USDC over on Merkle on the Arbitrum train with a TVL of 12.53 million and APY of 189%. And I see Bitcoin to ETH on Merkle Arbitrum train. TVL is 35 million and APY 112%. And we can just keep on going down this list. So I know that Merkle is a yield optimizer where you can basically earn on your already concentrated liquidity opportunities. So if I go and pull up this pool over on Merkle, let's just say type in wrapped Bitcoin, here we go, and then we'll go ahead and sort the chain, which is Arbitrum. Okay, so right here it is. It's showing a 112% APR, but remember, we have to take into account that that's assuming that we have a relatively tight range. Now the best part is this position is over on Uniswap v3, but it's just providing additional incentives through ARB token basically. And this is by being on Merkle, since Merkle facilitates reward token. There's also the wrapped Bitcoin to USDC one right here. So now that I know which pools these are, I can go ahead and head over to Metrics Finance, which is a great software which allows you to simulate potential returns on a liquidity pool. So I'm going to go here, select Arbitrum, and then Bitcoin. And then what we're going to be using on Metrics Finance today is 100% free. And do keep in mind that Metrics Finance does not factor in Merkle rewards. It only factors in the fees that you'd be getting for liquidity mining on this position. Now, as far as my deposit amount goes, I'm going to place it as roughly $10,000. And then as far as the range goes, I can do something, let's just say 20.5 23.5 and then to 23.5 or 23.9 like this. That seems like it could be a good range if you want to lean more towards Ethereum. And remember, we're trying to earn income on Bitcoin. So what I'd want to do is probably broaden the range in the upside. So I'm going to bring this to 24.5 right here. Then I'm going to bring this min price down right here. Okay, here we go. So we can lean a bit more towards 50-50 or a bit more towards Bitcoin itself. Then just like that, a range of 21.2 to 24.5. And that's supposedly going to get us a yearly APR of 88%. And Bitcoin is 41% and ETH is 58%. So I just went ahead and tightened it even more. Now we have 49% Bitcoin and 51% ETH. So you can see min price is 21.9 and max is 24.3. But this is a very narrow position, so you might need to check in this position daily and adjust your ranges as needed. And like I said, this is a relatively tight range. So what's going to happen is as the price jumps up and then chops down, what's going to happen is we're going to be shifted from Ethereum into Bitcoin or Bitcoin to Ethereum. And remember, this yearly APR that is estimated right here is not even factoring in the rewards that you can get over on Merkle. So these Merkle rewards on top of it could be an extra 20% or 30%. It's even possible for it to be an extra 50, 60, or 70%. Just remember, it's going to depend on your range as well as the other liquidity providers in the liquidity pool. Remember, I'm not a financial advisor in any way. I'm not telling you what you should or shouldn't do with your money. I'm just showing you our strategies over here on Builder Wealth. By the way, as I'm editing this video, I realized that I think some of the returns are overestimated. So when you select your fee tier, check both best for stable pairs, check best for most pairs, and check all of these, because I believe the one I use in the recording is kind of overestimating the returns. So make sure to do your due diligence. Anyways, this is one option you can use to try to get a very high APR on your Bitcoin. And this is by pairing it with a correlated asset like Ethereum. The next option, which is going to be relatively risky in a sense, but not too risky, and it's essentially using leverage. Now, this can be a good strategy if you're long on Bitcoin and actually willing to take on some significant risk. And now, basically what you would do with this strategy is you would go ahead and collateralize wrapped Bitcoin over on Aave. The thing is, collateralizing wrapped Bitcoin on Aave gives you roughly 0.08%. Now, the reason why I say Aave is because Aave is the top lending market out there. It currently has a TVL of roughly $11.865 billion. Keep in mind, DeFi's overall TVL is roughly $85.7 billion. So it definitely does make up for a big portion of that. There's a lot of liquidity over on Aave. So if you put your Bitcoin here, let's just say you were to put $100,000 over on Aave, and then you were to buy stable coins, let's just say USDC. So, and then let's just say use that USDC and go and buy some Bitcoin, but keep some of the USDC, and then enter into the wrapped Bitcoin to USDC liquidity pool. Remember, we can go ahead and do this over on Arbitrum network or any network. I'm just gonna show it to you on Arbitrum. So we're gonna go here and then here. So remember, if we're putting $100,000 of Bitcoin over on Aave, we're probably going to want to borrow like $40,000 of Bitcoin. Remember, these are all theoretical examples. And this is in the sense of if Bitcoin continues to decline as it has been pretty recently, and then we want to prevent ourselves from liquidation. All right, so now I'm going to do this, scroll down. And then for looking at this wrapped Bitcoin to USDC, say we're going to do a broader range of, let's just say $70,000. And then for min price, say we were to put it at like $55,000. You can see that gets us roughly 56% Bitcoin and 43% USDC. Now, the benefit of this pool is if Bitcoin starts to rise, our collateral, this wrapped Bitcoin right here, will rise and will make all the returns right there. But remember, we would be borrowing stable coins, and the stable coins should not rise in price other than the fact that we'd have to pay like a 5.89% borrow rate. And then of course, over on this wrapped Bitcoin to USDC strategy that we're running, as Bitcoin rises, we are being sold out of Bitcoin into USDC, but we're still making money from price appreciation as well as the APR. The APR right here says 33%, and if we were to slice that in half, we'd get like 16%. Now, why exactly would we want to slice that in half? That's because we're putting up roughly $100,000 of Bitcoin as our supply, but then borrowing roughly $40,000 or $50,000 as our borrow. So roughly on our initial $100,000, we're making $13,000 a year, which is roughly 13% APR on $100,000. But remember, we also have these Merkle rewards right here, which is showing roughly 189%. And keep in mind that this APR could be relatively low, relatively high. It really just depends where other liquidity providers have placed their liquidity. If you've enjoyed the video so far, make sure to subscribe and hit the bell to turn on notifications so you don't miss an upload, as I drop videos loaded with information all the time. Another thing you could possibly do is just take your Bitcoin and park it in something like wrapped Bitcoin to USDC. This could be great if you think the market is going to chop sideways or just move sideways for a decent period of time. And the reason why is because remember, as the price moves up, your Bitcoin is being sold into USDC, but as the price moves down, your USDC is being sold into wrapped Bitcoin. So if you're neutral neutral on the market right now or bearish, this wrapped Bitcoin USDC could be a solid option for you. So if you are bearish on the market or neutral on the market, the Bitcoin to USDC could be a good opportunity. I will say if you are bearish on the market though, you might want to do something like $53,700 on the min price, and then max price is $64,000, because that puts you at 72% USDC. You could make that lower. It gives you more USDC to buy out Bitcoin on the way down. And if you want to buy it out over a longer period of time, you can broaden that range. That will give you like 75% USDC. Or if you're neutral towards the market, you could just lean it towards like 50-50. That could be a good thing to do if you're neutral towards the market. Over the last 30 days, Bitcoin has consolidated between 56,000 and 66,000. And as you can see, we would have gotten like 42% APR if we were using this range over the last 30 days. So guys, I encourage you to go practice what I just did over on DeFi Llama, as well as over on Metrics Finance. And remember, for this video, we use strictly the free version of Metrics. So you don't have to pay for it. You don't even have to go create an account, but I will leave a link to a free 30-day trial of the pro version if you are interested. And remember, whenever you enter one of these positions, you are automatically getting rewards from Merkle just by being in that position. So always make sure to check your Merkle dashboard to see what rewards you haven't claimed. Anyways, that wraps up today's video. If you enjoyed, drop a like and subscribe, the notifications turned on, and I'll see you in the next one.